Why are Tesla and Palantir stocks dominating discussions in the financial landscape? Today, we explore recent developments surrounding these two stocks, scrutinizing the highs and lows shaping their trajectories. Let's first delve into ownership experiences. As an everyday investor, do you hold both Tesla and Palantir stocks? The market has seen remarkable growth in both companies, with Palantir boasting a staggering 200% increase in stock value and Tesla not far behind with over 100% growth this year alone. Share your diverse investment portfolios in the comments section. In the world of high-performing stocks like Tesla and Palantir, success often attracts its fair share of critics and skeptics. Palantir, in particular, faces controversies linked to labor disputes and strikes, mirroring broader discontent fueled by inflation. It's not just Tesla facing these challenges, other companies like Starbucks are grappling with similar issues. Share your thoughts on how labor disputes impact stock performance in the comments. Elon Musk, the charismatic CEO of Tesla, faces accusations of making anti-Semitic comments, adding a layer of complexity. Regardless of the validity of these claims, it raises questions about potential repercussions on Tesla's stock. Share your opinions on how external factors, such as comments from influential figures, can impact stock prices. Legal battles and labor disputes aren't exclusive to Tesla. A recent court ruling allowed Tesla to prevent factory workers from wearing pro-union T-shirts in its California plant. The UAW's intention to aggressively unionize non-union U.S. auto plants, including Tesla's, adds another layer to this ongoing saga. President Joe Biden's support for union efforts complicates the landscape. What are your thoughts on the role of unions in the corporate landscape and how they might influence stock performance? Share your insights in the comments. Amidst these challenges, positive indicators emerge for Tesla. Google Trends data reveals a significant surge in searches for both the Model 3 and Model Y, suggesting heightened interest and potential future sales. Additionally, the recent drop in interest rates for auto loans brings a breath of fresh air for the automotive industry. How do you think these factors will contribute to Tesla's performance in the coming months? Share your predictions in the comments. Shifting our focus to Palantir, recent reports suggest a potential slowdown in revenue growth and concerns about market saturation. How do you perceive these developments, and what impact might they have on Palantir's future? Share your views on whether Palantir's growth trajectory is sustainable. As we navigate through the intricacies of Tesla and Palantir's stories, it's essential to consider the broader market context. How do these events reflect or influence your investment strategies? Share your insights on how external factors shape your decisions in the stock market. In conclusion, the stock market is a dynamic space influenced by a myriad of factors. Both Tesla and Palantir face unique challenges but also showcase potential for growth and resilience. How do you think these stories will unfold, and what impact might they have on the broader stock market? Share your thoughts in the comments. Disclaimer: the opinions expressed in this content are for informational purposes only and should not be considered as financial advice. Investing in stocks involves risks, and individuals should conduct their own research before making investment decisions. Now, why is there so much debate about the revenue growth of a company? Let's delve into the recent discussions surrounding the growth trajectory of a prominent technology sector company. Contrary to some claims, the argument is presented that the revenue growth is not slowing down. Instead, there's evidence of a notable acceleration in the business model. Comparing quarterly results from the June to September period of the previous year, a substantial increase in revenue is highlighted. The company witnessed a growth of $4 million in the corresponding quarter in 2022. However, in the recent June to September quarter, the revenue surged to an impressive $25 million. It's emphasized that this growth occurred even before the full impact of significant government deals and the expected positive effects of AIP, artificial intelligence platform, set to play a major role in 2024. The narrative challenges the notion of slowing revenue growth by pointing out the company's significant acceleration in both year-over-year and quarter-over-quarter metrics. The optimistic outlook extends to the anticipation of a robust 2024, suggesting that the best for this company may yet be to come. Now, let's address the idea of taking significant profits and holding only a portion for long-term growth. The perspective shared challenges this strategy by acknowledging the unique nature of the company's shareholder base. Describing it as a cult stock, the argument suggests that investors in this company are not driven by short-term gains. Drawing parallels with successful cult stocks like Amazon, Apple, Tesla, and Berkshire Hathaway, the emphasis is on the long-term commitment and shared vision among the shareholders. Everyday Americans, what are your thoughts on investing in technology stocks for the long term? Leave a comment above. The commentary also touches upon the recent news of a significant sale of shares by an early investor, Peter Thiel. While some might interpret this as a lack of confidence in the company's future, the argument counters that it's merely a choice made by an individual investor who has held the stock for a decade. The focus shifts to other recent positive developments, such as billionaire investor Felipe Management taking a position in the company, underlining ongoing interest and support. A broader market perspective is introduced through insights from investment firm Wedbush Securities. The firm predicts the beginning of a new bull market in technology stocks, anticipating a surge in spending on cloud and artificial intelligence. The analysis points to companies like Apple, Microsoft, Google, and the discussed company as potential beneficiaries of this technology-focused bull market. An underrated aspect of the company's growth prospects is then highlighted: the involvement in over 140 artificial intelligence boot camps with various companies. The argument posits that this aspect, often overlooked, could be a game-changer, revolutionizing the business model by providing quicker results and solidifying the company's position in 2024 and beyond. Transitioning to financial metrics, the focus shifts to the company's financial health. It's noted that the company is growing gross profit at a faster rate than revenue, coupled with a reduction in operating expenses. This sets the stage for a leaner and more profitable company in the coming years. The anticipation is that every dollar earned will have a more significant impact on the bottom line, amplifying the company's potential as a cash flow and profit generator. The analysis also touches upon the perceived high valuation of the company, trading at 67 times expected forward earnings. However, the argument challenges this by suggesting that analysts may be underestimating revenue and, consequently, earnings. A hypothetical scenario is presented where even with a conservative 20% revenue growth, the net income is expected to grow by a minimum of 30%, showcasing the potential for robust profitability. Everyday Americans, what are your thoughts on these financial metrics and their impact on investment decisions? Leave a comment above. Addressing recent stock movements, the commentary briefly discusses the buying activity of prominent investor Cathie Wood. While acknowledging her recent purchases, it questions the level of conviction, given the relatively small percentage of the portfolio allocated to this particular stock. The argument suggests that true conviction would be reflected in a more significant allocation. The narrative concludes by urging investors to focus on the long term, emphasizing that stocks like the one discussed will always face short-term challenges. The importance of staying committed to the long-term vision and disregarding temporary market fluctuations is stressed. Everyday Americans, how does this perspective resonate with your own investment philosophy? Leave a comment above. In conclusion, the situation described, if accurate, could potentially impact the demand and pricing of the discussed company's stock. A positive outlook on revenue and profitability may attract more investors, driving demand and potentially leading to an upward trajectory in stock pricing. However, it's crucial to note that stock performance is influenced by various factors, and market dynamics can change rapidly. Disclaimer: this content is for informational purposes only and should not be considered financial advice. Investing in stocks involves risks, and individuals should conduct their own research or consult with a financial advisor before making investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel. so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.